Hey everyone. Today I'm going to show you how to use the market volume stop effectively. Many traders only focus on icebergs or CVD, while completely overlooking MV stop, yet it's actually one of the strongest signals to detect smart money behavior, when big players exit their positions or set traps for retail traders. In this video I'll break down what MV stop really is, how to interpret it on bookmap, and the 3 most practical ways professional bookmap traders use it in real trading. What is market volume stop? Market volume stop is a zone where large market orders appear right after price breaks through a key level and then stops or reverses. In simple terms, it's the area where buyers or sellers chase the market with market orders, but get fully absorbed by the opposite side, creating a signal of reversal or exhaustion. How to use market volume stop effectively. Strategy 1. Detecting exhaustion signs of momentum fading. When price rallies strongly and a market by volume spike appears, but price fails to continue higher, it's often a sign of buying exhaustion, indicating a high probability of a downside reversal. Conversely, when price drops sharply and a market sell volume spike occurs, then price stops falling or bounces, it often signals that the market is forming a short-term bottom. Practical applications. Identify the end of a short-term wave. Spot short-term reversals or high-probability scalping opportunities. Strategy 2. Identifying the trap, spotting a fake breakout. When price breaks through a key support or resistance level, but shortly after a large market volume stop appears and price snaps back, it's usually a fake breakout, indicating that retail traders chase the move with market orders, while big players absorb their liquidity. Practical applications. When you see a breakout followed by a volume spike but no continuation, consider it a fade opportunity, entering against the breakout direction. This is an extremely effective counter-trend entry strategy, especially around high liquidity zones or trap setups. Strategy 3. Identifying big player stop hunt zones. Sometimes big players intentionally push price beyond key levels to trigger retail stop-loss orders, creating a large market volume spike, and then reverse the move sharply. How to identify it? A large or abnormal market volume stop appears right at a major liquidity zone. Price briefly breaks through the level, then snaps back quickly, often forming a long wick or a strong pullback. Practical applications. Use this to spot stop-run stop-hunt areas engineered by big players. Enter in the opposite direction after price pulls back from the spike, taking advantage of the strong reversal that often follows stop hunts. Combining market volume stop with other tools. Just focusing on the market volume stop alone isn't enough. To improve accuracy, you should combine it with other confirmation tools. Below are some of the most effective combinations that professional traders often use. 1. CVD. Observe whether CVD continues in the same direction as the volume spike. If CVD does not follow through, it's a sign of exhaustion. Goal. Identify weakening momentum and potential reversal signals. 2. VWAP. When a market volume stop appears far from the VWAP, the probability of a mean reversion move back to VWAP increases significantly. Goal. Spot reversal setups toward the fair value zone. 3. Iceberg detector. If an opposite direction iceberg order appears at the market stop zone, it indicates big players are absorbing market orders. Goal. Confirm traps or fake breakouts. 4. Liquidity heat map. When a market stop aligns with a dense liquidity area, the signal becomes extremely strong and reliable. Goal. Identify precise reversal entries with high probability. Quick summary. 1. Market volume stop at the top of a wave. Buyers exhausted. Action, sell. 2. Market volume stop at the bottom of a wave. Sellers exhausted. Action, buy. 3. Market stop plus price snapback. Stop hunt fake breakout. Action, trade in the opposite direction. 4. Market stop plus opposite direction iceberg. Big player absorption. Action, confirm reversal. When market volume stop aligns with the trend, don't go against it. When watching market volume stop on bookmap, many traders mistakenly believe that whenever a buy volume stop or sell volume stop appears, the market is about to reverse. But in reality, that's not always the case. 1. Understand what market volume stop really means. Market volume stop isn't a reversal indicator. It simply highlights zones where a cluster of stop-loss orders has been triggered. When this happens, it means a group of traders has been forced to close their positions using market orders. By itself, it doesn't say whether price will move up or down. You have to look at it in the context of the overall trend. 2. When market volume stop appears in the direction of the main trend. For example, imagine the market is in a strong uptrend, and you see a market buy volume stop. That means short sellers are being stopped out, while new buyers are still pushing the price higher. As a result, price doesn't slow down, it accelerates. The stop-loss flush actually becomes fuel for the next leg of the trend. 3. On the other hand, when market volume stop goes against the trend. Suppose the market is trending up, and you see a market sell volume stop appear. That might indicate some traders are taking profits, or the market is reacting temporarily to resistance. In this case, price may pull back slightly, but if the dominant trend remains strong, it's usually just a temporary correction, not a full reversal. 4. The golden rule: never go against the main trend. A market volume stop in the direction of the trend equals confirmation of real momentum, not a trap. A market volume stop against the trend equals a possible short-term pause, but not a reliable reversal signal. In other words, if you see a buy volume stop in an uptrend, focus on buying with the trend, not selling against it. If you see a sell volume stop in a downtrend, focus on selling with the trend, not trying to catch the bottom. 5. Conclusion. Market volume stop reveals where traders are being forced out, but the next direction depends on the broader trend structure. So when a market volume stop appears in line with the trend, take it as confirmation of real strength. And remember, the best move is to go with the flow, not against it. In this example, we can see that the main market trend is upward, so our priority is to look for buying opportunities. When observing the overall structure, price is rising and iceberg orders are being triggered, indicating absorption from the buy side. As price approaches the limit order wall, it temporarily gets pushed down by selling pressure. Soon after, sell market volume stops appear, signaling that sellers are running out of strength. CVD is also moving in the same upward direction. Additionally, there's still significant liquidity above, suggesting that big players are absorbing sell orders. Therefore, the most strategic approach is to wait for strong buying activity to appear, typically shown by green bubbles, and then enter a long position in line with the main trend. In the second example, we can see that price moves up to the resistance area, where it encounters a high limit wall acting as a barrier. At this level, price gets absorbed, and buy market volume stops appear but are rejected on the first attempt. When price returns to the high limit area for the second time, a dense cluster of buy market volume stops emerges with high trading volume, yet price still fails to break through the high limit wall. At the same time, hidden ask orders start to increase gradually, indicating strong absorption from sellers and that price is being held down around this zone. Additionally, CQC shows that sellers are dominating by a 4-to-1 ratio over buyers, confirming that buying pressure is weakening. Therefore, the most strategic approach is to wait for sell market orders to appear as confirmation of selling pressure. Then enter a sell position, placing the stop-loss just above the high limit wall. And target the lower liquidity zone, or exit when a clear reversal signal occurs. Thank you for watching this video. If you found it helpful, don't forget to like, subscribe, and turn on notifications so you won't miss the next deep dive sessions on bookmap and smart money flow analysis. See you in the next video.